Hi traders, welcome to my channel. I am OT Josh, and in this video I will be taking trades based on volume and price analysis. From what I am saying now, the market is about to make a reversal upward or a short-term retracement before it comes down, or a reversal and a breakout, because this is an anomaly in this trend. It's showing that this move is not supported by volume because of this volume is low compared to this weak candle. So we'll be watchful to see what's going to happen here. Let's see. I will use my Fibonacci ratio for this one because it's important to use now. Okay, so from what I'm saying, the 61.8 level is okay, it's breaking out. Let's see what's going to happen. Okay, price has broken out from this 61.8 level. Okay, I'll take it. Okay, now it's going back. I think there is a 70% level from in this place, but I can't really, it's not showing. But if this volume in this market, if this candle is going to close above this 61.8 level, it's going to act as a support to take this market back up. Because this volume has already shown, this volume and price analysis in this downtrend has already shown that the market will not be going up, will not be going down for in the future. So what I need is to see if this volume is high. If this volume is higher than this volume, then all I need to do is for price to come back here, and I'll take it up. And okay, yes, it's higher than it. Oh, even at the 50% now. So I think I'll be doing, yes, I'll be doing the call. I'll be doing the call trade there. So let's see how it goes. Although I should have done it below here, but I believe the 50% level is strong. The 60% and the 50% level, they are strong for this ranging market, a volatile market. So I believe it will work. But let's wait and see how it's going to happen. Okay, let's wait and see. Let's wait and see. Still have some few seconds left. This is how you trade with the Fibonacci level. So after now, I'm going to remove this Fibonacci level and plot it again, because for sure I know this candle, this thing is going to close above my entry points. See, one, and there's a draw. Okay, it's going to go, it's going to move up again. I should have not removed it in the first place. It's going to move up, so let me see where I got it. Okay, I think it's going to move up again. I'm having a cough because of the weather here. Okay, it's going to move up again. Why did I do this call trade? I know I believe it's going to close above this 50%, above this line here. It's going to close above it, but it's a good thing I got it here. Why am I doing it? Because I can see a validation between price and volume here. When there is a validation, there is a there tend to be a continuation of the normal price action. You see this candlestick with a high volume, you see this candlestick with a high volume, high spread, low volume, low spread, validation. So price action continues using the same key level that I used earlier on. What is happening? Okay, I got two draws now, and I am going to stop. This is how everybody should trade. This is how everybody should trade. You stop when the market is too volatile. You see, the volatility is causing this. You can see all these weeks, everything is, and this may take you off your game. So when you see this market, you have to be self-aware. You have to understand the information that the market is telling you. The market is saying, we will not respect your analysis for now, stay out of the market. So I'm going to stay out of the market. I intend to make this video a trading video, but from what I am saying, it's not going to be a trading video in terms of ITMs. No, it's going to be a trading video in terms of self-awareness and journaling. So with this, I can now, I've experienced this before, I'm experiencing it again, so I can be sure that we are not going to trade in this kind of volatile market. It is not safe. So until next time, if you have a comment, leave a comment in the comment section. Like this video and share with your friends and loved ones. So until next time, bye bye. Thank you.